Hello, fellow traders worldwide. This is Gabriel here. Welcome back to my channel, Forex.Real.Trader coaching sessions. First of all, I do really want to express my gratitude because you have been supporting my videos, and that is very important for me because it gives me the boost to continue uploading this kind of information about Forex, what it is not. So thank you very much for that support. Today's video is another educational video about a very interesting bearish candle pattern. Its name is Falling Three Methods candlestick pattern. Let's analyze the context of this pattern. First of all, it can be a continuation pattern or also a correction pattern that appears in a downtrend, okay, signaling that the bearish trend is likely to continue, okay? What is the structure? This is an extended pattern because basically you can see this one with 5 candlesticks, right? So we can see a first bear, okay, strong bear, okay, and we have 1, 2, 3 small bull candles and a final candle that is a strong also bear candle. What is the thing here? The ideal scenario is to see this graphic like that in the charts. But the reality is different, okay? Remember that trading is an art. So the art of trading is the art of observation, right? So how acute we are and how we focus on our attention on seeing things as they are, right? And sometimes we don't have the chance to see exactly the patterns as we have in graphics or simulations. When you go to the real charts, you have to spot something that is very likely, very similar to the ones that we learn in charts, right? Or in graphics or pictures. What is the thing here? Let's observe this very pattern on our real charts. I checked some patterns on my MetaTrader 5, and I spot this one in here. This one is in an uptrend. That is it, the confirmation of what I'm telling you. Not necessarily you see this one on a downtrend. You can also spot it in a counter trend, right? So look at this. I can observe that this is my pattern. So I have 1, 2, 3, 4, 5 candles, okay? The first candle is a long, right, strong bear candle. And my 3 bull candles are showing slightly higher highs as a kind of consolidation. Something important to observe in here is that these 3 candles are always, and that is a rule, are always within the range of the body of the first bear candle, right? So in this moment, that is a valid, okay, pattern. The next candle, the 5th one, is a bear candle. So number 5, the one that closes, is here. So that's a valid a pattern, a valid structure for the falling three method. Another thing, and remember something that I mentioned, is we cannot solely rely on one pattern to execute a trade. No, I need and I have to be careful. I need to observe all the indicators, all the tools, such as, I don't know, Fibonacci's, exponential moving averages, or simple moving averages as support or resistance, and also how this pattern is formed according to the previous Fibonacci levels in order to what? To have an educated guess in order to execute the trade, okay? For example, here I can tell you that this trade is also interesting because at the very moment, this pattern, at this very moment, when the pattern starts to form, I can see that the MACD is behaving in a bear. It's a semi-divergent observation here for this EMA because the histogram is bull. However, the histogram is losing momentum, lower lows, lower lows, lower lows, lower lows, okay? And this line, this trigger line, is above the blue line. That is a nice indicator as well. Another thing that you can observe is, for instance, when you take use of your tool known as a Fibonacci, the Fibonacci retracements. You can see here that on this very, let me show you here, on this very level, 50 level, remember, Fibonacci has 3 meaningful levels that can function as support or resistance. In this case, this 50%, right, is not a Fibonacci per se, but traders use it because price sometimes have some resistance or support when it reaches the 50%. So here in this case, I can observe that my bear candle found resistance and formed my first candle of the pattern. Then my other 3 candles for consolidation and my final bear candle. And in that moment here, you can see that definitively is a kind of confirmation, right? Only based on those signals that the trend is coming down, okay? Because now it's almost flat, the histogram, and the red line is widening from the blue line. That is a nice indication as well. So this is just to show you that we can find this very pattern on a uptrend observation. I also spotted another one here, and that is on a downtrend, right? So let's analyze that one over there. It's over here. I told you, this pattern is not that common, right? So it takes time to be spotted. Okay. Here you are. This is it. Okay. Here's another one. And as you can see, this pattern is from a what? Is seen, can be spotted from a downtrend, okay? Because it's showing somehow lower highs, lower lows, right? However, it's not that clear, but somehow my SMA 200 and my EMAs, right, in this case, 50 and 18, show me that in fact the trend is coming down, right? And I spot my structure here, my bearish structure on this very spot. So how to trade it? Okay, again, we need other indicators, other signals to confirm that this bearish falling three method is a valid pattern. Let's suppose that it's like that. Let's analyze if it is in agreement with what I just mentioned. All right, so I have a first candle that is very powerful, and all the 3 bull candles are within the range of the first one. Okay, that is a good one. Now I have the next candle closing my pattern, and even a confirmation candle. That is a good one, right? And let's say that everything is set in there. How to trade it? It's basically something that I always mention in the videos. We need to be responsible. Every time we place a trade, it has to be with stop loss. It has to be with take profit. You need to bear and take into account the proper leverage, okay, and the ratios that you're going to use. All right. Say that we are aware of everything. So now how to place it? Ideally, I would place it here, right? When this consolidation, when this confirmation candle is closed, I would place it in there. However, some traders, and that is valid too, here the important thing is to be patient till the last candle, the 5th candle, is closed. So It closed right here, so I say, okay, it's a valid pattern. So you can place it either here or here. Let's say that I place it right on this very close of the pattern. So this is my entry point. Let's mark it as blue, as entry point. Okay. Where should I place my stop loss, right? So ideally, I should place it here, right? Right above my first candle. So above these candles opening here, right? So that would be around 6 point, almost 7 pips, right? So let's place it there. So I'll place it, here is my stop loss, right? Then we're going to talk about the minimum pips for stop loss. This is just to show you, to tell you about the discipline of always placing stop losses. So if I have my stop loss here with 7 pips, right? 7 pips. Here is 7 pips, my stop loss. Remember that my ratios are 1 to 2 or 1 to 3. So if my stop loss is 7, my take profit should be 14. Or here should be 21 pips. Let's be conservative here. And let's do it with 14 pips. Let's see where my 14 pips are. So I'll place, this is my entry point. Here, 14. Ah, awesome. Here's 15 even, right? So I could place it here, right? A little bit of it. So here is my take profit, right? And this ratio is what? This is a 1-2 ratio. So I am risking 7 pips in my stop loss because I am aiming for 14 pips, right? So that is good. Remember something that I always mention. In trading, there is no 100% guarantee that a trade will be successful. But we can handle our edge, right, over the market by being intelligent at the moment of placing the trade. Always, the take profit has to be higher than the stop loss. Never move your stop losses. Never, no matter what. Okay, if the trade went against your position, no problem, because you are covered. Because your ratios will always be that every time you make $2, you lose 1. 2, 1, 2, 1. In the end of the game, you will win, right? So there are trading plans that are 50% effective, and you can make the same money, right? So this is the thing. That is the way how I'm going to place a trade, how I'm going to set it up. All right. Something important to mention before I finish my video today is that all the information that I take and that I gladly share with you come from my experience as a trader and also from the different books that I have read along this time. This one is one of my favorites, right? So this book is amazing. So I don't mean to tell you that you buy this book, of course not, but always do your own research, right? Through mentors, through books, and the experience that you have with real charts, okay? So all the time, or you can have demo accounts as well, but the idea and the objective is to be all the time focused, right, on what you do with Forex, with this exciting industry. All right, just a little reminder, just to finish. If you find my channel and the information that I share and provide here as something useful and somehow important in your trading learning process, please subscribe, like, and share to continue building this community of retail traders with real information, right? So my dear traders, thank you very much for your support. See you in the next video. Bye-bye.